Folks, it's not just about shares. You're not going to believe what AMC literally just released a statement on. Let's get into this. Just remember that when I reveal this to you, you're going to want to sign up for life insurance by going to metkevin.com/life or price shop it with Lemonade by going to metkevin.com/lemonade. Check it out. I'll link it below as well. Hey everyone, me Kevin here. Why is AMC falling today? In this video, I'm going to provide answers as to why AMC stock is falling. Take a peek at this. If we look at the chart, we'll see that currently at the time of this recording, AMC is recovering. It's moving mostly within the lines that we've drawn on our technical analysis here. It is presently down about 27.6%. This is about the opposite of what Workhorse is doing. Workhorse is up about 22%, though Workhorse has also had about a 20% movement in the day, given that it was up about 40%. Workhorse is about 47% short via short interest readings from S3 Partners. AMC sitting at about 18.09% short, according to S3 Partners data. Now keep that in mind. Those are estimates from them, does not necessarily mean it's 100% accurate, and there are questions in terms of how synthetic shares are counted anyway, but keep that in mind. That's sort of what I've been using as a measure of short interest, and I notice that Workhorse is insanely high. But aside from that, let's go ahead and understand, why is it that AMC is falling? Why is AMC down at the moment now 28%? What's happening? What has changed? Well, folks, it has to do with shares being sold. Take a peek here. Back in April, on April 27th, there was an indication that AMC might, very important that we notice this here, and says, in fact, actually their verbiage here is, we may, through our sales agents, offer and sell from time to time up to 43 million shares. And this is a prospectus agreement between Goldman Sachs, Riley Securities, and Citigroup Global Markets. Now, this becomes important. Why, or what does this actually mean here in April? Well, what this means in April is, hey world, just a heads up, we're in talks to sell shares of AMC, and at some point in the future, we might decide to actually pull the trigger and sell those shares. Well, folks, let's take a look at what happened today. Today, we had an 8K released by, Form 8K, released today, June 3rd, by AMC. And in this 8K, see, here's AMC. In this 8K, we will find that AMC has stated on June 3rd, 2021, that's today, that's really important because there are a lot of folks going, wait a minute, that sale happened in April, that's FUD. No, it's not. This is today. Today, AMC is saying, we have entered into an equity distribution agreement with, again, Riley Securities and Citigroup Global Markets as sales agents to sell up to 11.55 million shares of Class A stock and this would be an at-the-market offering. Now, obviously, at the market has fluctuated a little bit between, well, now $46 and about $63, which was the prior closing price. But in other words, AMC has the right to sell 11.55 million shares. Now, this does two things. One, it could put downward pressure on the actual markets if in the event, let's say, AMC sold these shares directly to Riley Securities, and then Riley Securities turned around and sold them onto the market. It's entirely possible that they could do that. There is a note in their prospectus that these shares are going to take 2 business days to settle, but we don't really care about them settling. You could sell before something settles. It's kind of like when we trade. Let's say if you buy 100 shares of AMC today, that's not going to settle for 2 days, but you could turn around and sell it or transact again if you wanted to. So that's more of like an underlying mechanics thing. But anyway, we have 11.55 million shares being sold, or up to. And if we multiply that out, 11.55 million shares at, let's say, the previous close of about $63, that's about $727 million of money that's being raised. Even if they got the current price at 46, it's about $531 million of capital that AMC is able to raise and use. Now, keep in mind, as of March 31st, they had about $11 billion in debt. That number has changed because we've started to pay down some debt, but as of March 31st, the debt reading was about $11 billion in debt at the company. What we can do also is we could go to the June 3rd prospectus, and get some other insights, because it's not just the share sale, but it's also some of the verbiage that's in this document. And I think that's very important to look at as well. Take a peek here. So this is where we have the prospectus that says we have entered into an agreement to sell about 11,550 shares. But take a look at this, folks. All right. Under the circumstances, and this is where they talk about the volatility of their stock going from a low of $1.91 on January 5th to an intraday high of $72 on June 2nd. They talk about this volatility, right? After this volatility, take a peek at this. Under the circumstances, we caution against investing in our Class A common stock unless you are prepared to incur the risk of losing all or a substantial portion of your investment. Folks, AMC is literally selling shares and then telling you our stock is overvalued. That's rough. That's a really, really rough statement here. Not only that, but take a look at that. Investing in our Class A common stock is highly speculative and involves risk. Folks, they're talking down their own stock here. Now, maybe this is probably just CYA, cover your, and that could be common, because the last thing you want is people like suing AMC and creating a bunch of legal headaches for AMC, because people are like, well, Adam Aaron, they implied he was an ape, and therefore you made me buy the shares. They're being very clear here that, as they say here, look at this. The market price of our Class A shares has experienced and may continue to experience rapid and substantial increases or decreases unrelated to our operating performance or prospects or macro or industry fundamentals. And substantial increases may be significantly inconsistent with the risks and uncertainties that we continue to face. To me, it sounds like an attorney, just doing the CYA. But still, look at this. They even talk about a short squeeze here. A short squeeze due to a sudden increase in demand for shares of Class A common stock that largely exceeds supply, or focused investor trading in anticipation of a potential squeeze, have led to and may currently be leading to, and could again lead to, extreme price volatility in our shares. And we will plan to use this money for corporate purposes, which may include the repayment of, refinancing of, redemption of, or repurchasing of existing debt, acquisition of theater assets, working capital, or capital expenditures. So you've got a two-folded attack on AMC here coming from the company. Number one, 11.5 million shares, 11.55 million shares. That's a big dump. But folks, the warnings here in bold on the prospectus, we caution you against investing in our stock unless you're prepared to risk losing all or a substantial portion of your investment. Notice they didn't say, or there's a chance of you getting a ton of attendees. Again, I think this is just a lawyer, CYA, but folks, this is their document. That's why we're seeing a 27% sell-off on AMC today. That's rough. It's kind of rough, it's a little bit of a slap in the face to the ape army, I have to say. Now, I've mentioned that my strategy on this has actually been selling puts, which is a bullish move, but I haven't been buying calls, especially when we have a big run up like we did yesterday. So I'm going to get assigned my puts tomorrow, presumably, unless the market runs. And so if I get assigned, I'll be in at about $49. Right now we're at about $45. So that puts me within about 10%. Not too shabby. If we stabilize around here, we'll see what happens. And but yeah, that kind of gives you a little bit of an update as to what's happening with AMC. It is very risky. There are a lot of, they could continue to raise shares. If this goes up again tomorrow, 20-30%, they might do the same thing again on Monday. So just keep this in mind. They are being smart in terms of the business aspect, which is paying down debt and raising money so they can operate. This is good for the company in the long run, though, because ultimately we don't want them to be massively indebted. We want them to have cash, we want them to have money, and we want them to be able to go make smart investments for the long term. There's an update for you. If you found this helpful, consider subscribing. Make sure to share the video if you like the information that you found within this video. And folks, we'll see you.